Solved problems. Financial statements. Statement of financial position. Statement of comprehensive income. Statement of changes in equity. Liquidity ratios. Working capital. Current ratio. Quick ratio. Probability ratios. Return on sales. Gross profit. Problem. Please prepare the following financial statements of AC2C company for 2021. Statement of financial position, statement of comprehensive income, statement of changes in equity. Notes to financial statements. Also, please compute the following financial statement analysis. Vertical analysis, liquidity ratios, working capital, current ratio, quick assets ratio. 3. Profitability ratios, return on sales, gross profit. The account balances are given below. Cash in bank, 12,670,000. Cash on hand, 329,000. Petty cash fund, 43,000. Trade receivables, 2,934,000. Notes receivable, 5,790,000. Interest receivable, 126,000. Merchandise inventory, 6,987,200. Prepaid supplies, 650,000. Prepaid rent, 450,000. Office equipment, 2,920,000. Stores equipment, 1,720,000. Buildings, 9,230,000. Accumulated depreciation office equipment, 1,390,000. Accumulated depreciation stores equipment, 964,000. Accumulated depreciation buildings, 3,982,000. Long-term investments, 6,234,000. Trade payable, 5,923,000. Accruals, 760,000. Current portion of notes payable, 3,500,000. Income tax payable, 689,000. Non-current portion of notes payable, 4,590,000. Deferred tax liability, 12,645,000. Owner's equity January 1, 2021, 20,230,200. Sales, 34,900,000. Cost of sales, 12,430,000. Other income, 1,297,000. Interest expense, 232,000. Income tax expense, 13,491,000. Salaries and employees benefit sales, 640,000. Salaries and employee benefit admin, 1,420,000. Rent expense operations, 230,000. Rent expense office, 310,000. Advertising expense, 45,000. Depreciation expense office equipment, 200,000. Depreciation expense stores equipment, 200,000. Depreciation expense buildings, 200,000. Miscellaneous expense, 389,000. Let us put the figures into trial balance as under. Trial balance 2021. Account titles, debit, credit. Cash in bank, debit, 12,670,000. Cash on hand, debit, 329,000. Petty cash fund, debit, 43,000. Trade receivable, debit, 2,934,000. Notes receivable, debit, 5,790,000. Interest receivable, debit, 126,000. Merchandise inventory, 6,987,200. Prepaid supplies, 650,000. Prepaid rent, 450,000. Office equipment, 2,920,000. Stores equipment, 1,720,000. Buildings, 9,230,000. Accumulated depreciation office equipment, credit, 1,390,000. Accumulated depreciation stores equipment, credit, 964,000. Accumulated depreciation buildings, 3,982,000. Credit. Long-term investments, debit, 6,234,000. Trade payable, credit, 5,923,000. Accruals, credit, 760,000. Current portion of notes payable, credit, 3,500,000. Income tax payable, 689,000. Non-current portion of notes payable, 4,590,000. Credit. Deferred tax liability, 12,645,000. Credit. Owner's equity January 1, 2021, 20,230,200. Credit. Sales, credit, 34,900,000. Cost of sales, debit, 12,430,000. Other income, credit, 1,297,000. Interest expense debit 232,000. Income tax expense debit 13,491,000. Salaries and employee benefit sales 640,000 debit. Salaries and employee benefit admin 1,420,000 debit. Rent expense operations 230,000 debit. Rent expense office 310,000. Advertising expense 45,000 debit. Depreciation expense office equipment 200,000 debit. Depreciation expense stores equipment 200,000 debit. Depreciation expense building 200,000 debit. Miscellaneous expense debit 389,000. Total debits 79,870,200. Total credits 79,870,200. Let us prepare statement of financial performance. Statement of financial performance. Particulars amount. Sales 34,900,000 less cost of sales 12,430,000. Gross profit 22,470,000. Operating expenses. Selling expenses. Salaries and employee benefit sales 640,000. Rent expense operations 230,000. Advertising expense 45,000. Total selling expenses 915,000. Administrative expense. Salaries and employee benefits admin 142,000. Rent expense office 310,000. Income tax expense 13,491,000. Total admin expenses 15,221,000. Total operating expenses 16,136,000. Operating income 6,334,000. Operating income. Gross profit 22,470,000 minus total operating expenses 16,136,000, that is equal to 6,334,000. Other income and expenditure. Other income 1,297,000. Interest expense less 232,000. Depreciation expense office equipment 200,000 less. Depreciation expense store equipment minus 200,000. Depreciation expense buildings minus 200,000. Miscellaneous expenses minus 389,000. Net income 6,410,000. Let us prepare statement of financial position. Statement of financial position. Particulars amount. Assets. Current assets. Cash in bank 12,670,000. Cash on hand 329,000. Petty cash fund 43,000. Trade receivable 2,934,000. Notes receivable 5,790,000. Interest receivable 126,000. Merchandise inventory 6,987,200. Prepaid supplies 650,000. Prepaid rent 450,000. Total current assets 29,979,200. Non-current assets. Office equipment 2,920,000 less accumulated depreciation office equipment 1,390,000. Net office equipment 1,530,000. Stores equipment 1,720,000. Accumulated depreciation stores equipment minus 964,000. Net stores equipment 756,000. Buildings 9,230,000 less accumulated depreciation buildings 3,982,000. Net cost of buildings 5,248,000. Long-term investments 6,234,000. Total non-current assets 13,768,000. Total assets 43,747,200. Liabilities. Current liabilities. Trades payable 5,923,000. Accruals 760,000. Current portion of notes payable 3,500,000. Income tax payable 689,000. Total current liabilities 10,872,000. Non-current liabilities. Non-current portion of notes payable 4,590,000. Deferred tax liability 1,645,000. Total non-current liabilities 6,235,000. Total liabilities 17,107,000. Owner's equity. Owner's equity January 2021 20,230,200. Add net profit 6,410,000. Total owner's equity 26,640,200. Total liabilities and owner's equity 43,747,200. Let us prepare statement of changes in equity. Changes in owner's equity amount. Owner's equity January 2021 20,230,200. Add net profit 6,410,000. Total owner's equity 26,640,200. Let us prepare liquidity ratios. Liquidity ratios. 1. Working capital is equal to current assets minus current liabilities. Working capital is equal to 29,979,200 minus 10,872,000. Working capital is equal to 19,107,200. 2. Current ratio is equal to current assets by current liabilities. Current ratio is equal to 29,979,200 by 10,872,000. 2.76 is to 1 is the current ratio. 3. Quick ratio is equal to current assets minus inventory by current liabilities. Quick ratio 29,979,200 minus 6,987,200 by 10,872,000. Quick ratio is equal to 22,992,000 by 10,872,000. Quick ratio is equal to 2.12 is to 1. Let us prepare profitability ratios. Profitability ratios. 1. Return on sales. Operating income by net sales. Return on sales 6,334,000 by 34,900,000. Return on sales is equal to 18.15%. 2. Gross profit is equal to net sales minus cost of goods sold. Gross profit is equal to 34,900,000 minus 12,430,000 is equal to 22,470,000. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.